technically speaking, it is you see here, notice how difficult time falling below this part. Do you see how it should be projected? It is projected as the multiple retest. The multiple retest, the more times it gets tested, the stronger it becomes. That is the illusion behind support and resistance. And we can see it all over. It has been taught. You can go there. Multiple retest, multiple retest. This is how it is taught. This is how it is taught. The more times it gets tested, the stronger it becomes. This is the illusion. This is the illusion behind technical analysis. So it's not you only who is seeing this. This is majority of people that are learning how to trade. This is what they are looking at. Multiple retest. The more times it gets tested, the stronger it becomes. But in actuality, the more times it gets tested, the weaker it becomes, right? The more times it gets tested, the weaker it becomes. Do you understand that? The more times a wall gets hit, I don't care how strong that wall is, a consistent amount of pressure applied onto that wall or impact, at some point it gets weak. That's why they say that, what is it? A chain is as strong as its weakest link. That means, like, if you have a chain on the other side, someone is pulling on the other side, both sides will both pulling. If the chain breaks, it's going to break on the weakest link, the one that it's weak. It will break. So even the same thing that occurs here, the more times this specific thing gets tested, or the support or resistance level gets tested, the weaker it becomes. Because if you are looking at this area here, that means that there are more people that are currently getting in place. They are placing long positions, long positions, long positions, long positions. The more it gets tested, the more they actually start believe that it will hold, right? But now, once you do this, what occurs to everyone that is located around this area here? The more it does this, what occurs to everyone that is situated around this area here? Everyone is getting out, right? So the minute you do this, this is not the market crashed. The market did not crash, guys. The market did not crash. No. This is the reflection of the amount of orders that are located around this area here. The reduction in price is a reflection of the amount of buy orders that got stopped out. The amount of people that got forced liquidated out of that specific area, they are the fuel or the source of strength to the reduction in price. They are the one that are going to be in a position to determine the depth of that breakout. They are the one that actually give this length. They are the one that gave this length. Because if you're going to trigger a lot of people, and those majority of people that you're going to trigger are going to add liquidity to the sell side. Picture an overwhelming amount of buyers changing to sellers. An overwhelming amount of buyers. The ones that were carrying this thing on a daily time frame, the ones that are carrying these things, all of a sudden they get liquidated. Now they are on the sell side. Like everyone now is on the sell side. So the question is that, like, how many buyers are present within that specific amount of time? Though there might be any buyers that are present, but they are bleeding through the wound. Like, it's very tough for them to actually get in position because the amount of sell side liquidity that is coming in, it's forcing them to run into the negative, isn't it? Shout out K Dot, shout out. So now we have this amount of push to the downside, but the push to the downside, again, you have to also factor in that now you have this situation that is located around this specific area here. So those that are located here, their main objective is to try and do what? To protect their already existing buy positions. Because as price continues to reduce in value, the amount of buyers that are willing to commit now starts to increase as compared to this area here. So now the commitment has shifted as compared to the amount of commitment that was present initially from the sell side, right? So as price continues to reduce in value, the amount of commitment that the sellers have as compared to the amount of commitment that the buyers have now shifts, right? Are we okay with that? So now we're looking at this area here. Now you get to understand that the opportunity to absorb the amount of liquidity that is coming in this area here now presents itself, because now you have no competition in terms of how many people are willing to buy with you. So there's no competition over price. And therefore, when the volatile movements come into this area here, you start to see that it consists of a lot of buyers, right? It consists of a lot of sellers. And then, it consists of a lot of sellers. So if we have few sellers, if we have a lot of buyers and few buyers coming, if we have a lot of sellers coming into the market and we've got few buyers, guess what occurs? Now, those that have the necessary amount of money, they have the opportunity to absorb all the necessary liquidity that is coming into the market, right? Remember that how we actually view support and resistance. Support and resistance, basically, like now when you're looking at support, this actually is a support. So that means that the amount of liquidity that was coming into this area, the sell side liquidity, it got absorbed by buyers. So therefore, the buyers overwhelmed the amount of sellers that were coming into the market, resulting in a push to the upside. The same situation occurred when price got into this area here. Because of the distance that the market has traveled, along the way, it has been accumulating buyers. So along the way, when you are carrying in buyers, you're carrying in all these buyers, this is dead weight, so you don't want it. What are you going to do? Reduce the price, get them out of their already existing buy positions, because they have already entered when the price of the specific asset has already been increased in value. So therefore, it is expensive. So when it is expensive for them, remember that you bought it cheap. To you, the only thing that has occurred is that your investment matured. So you're taking some of the tip, like you're taking the tip off. So when you're taking the tip off, it results in a reduction in price. So the reduction in price, once the market breaks below a key significant area, what occurs? The snowball effect comes into play. Monkey see, monkey do, isn't it? Or are we lying? Monkey see, monkey do. The market breaks below the level. Everyone says gold is about to tank. Everyone gets out of their already existing positions, because now that's the fear. They fear the reduction in price. This is the snowball effect. Once the market breaks below a significant swing low, now everyone is looking at it as a retest. Now everyone is looking for a reduction in price. But why are they looking at a reduction in price? Majority won't tell you why they're expecting a reduction in price. The very same situation that has occurred here, we saw it occurring here. That's the forced liquidation process. And that is one thing that we're going to see occurring here. So you see the push to the upside, it might be as great as this one. It might be the inverse of this one here when we push to the upside, because remember that we're trading within a state of consolidation, a state of comfort. So once we spike above this area here now, okay, are we making a rally? Right? Everyone is shifting in perspective. Are we okay? Though majority are looking at this area, say we need to feel the tail. But the tail is the same as a gap. It has no duration in terms of when it should be filled. Right? Okay, you see it. Inverse head and shoulder pattern. Yes, we see that. We see that. Everyone sees it. Right? But you have to have a clear understanding of why you need to see price go into the upside, aside from you saying that, oh, it's an inverse head and shoulder pattern. So an inverse head and shoulder pattern, this is where it needs to complete. Yes, we know that. But the question is that, like, why are you buying at this particular price level? The reason why I'm buying at this particular price level is because I'm using the same, the same approach as I did here, based on human behavior, not based on previous template. So the template that I'm using is how humans behave when they see a specific key area get broken. So when they see a specific key area get broken, how do they behave?